Understanding the banking system is all driven by liquidity, literally by the printing of money out of thin air. And when we pop on the liquidity indicator, what are we seeing at the moment? Prices are typically supported when liquidity comes into the system. Prices tend to go up, but when liquidity comes out of the system, prices tend to come down. There's a bit of a delayed reaction, but on average, it's a fairly reasonable signal. Here we're looking at Bitcoin on a daily basis. What we've found over time, liquidity does do these kind of things, but it often rebounds, so just be aware of that. The main markets in the past trading session, all sectors were down 0%, neither up nor down. The greatest losers were in materials and real estate, the greatest gainers, financial and utilities. There's a lot of fear inside the main markets, but the thing with fear, it always turns around. It just depends when. And when fear is rampant inside the markets, that typically hammers out the bottom of price. So just be aware, everybody wants to buy the bottom, but very few do because they've run away and sold everything. And they'll get attracted back into the markets when the markets go green, only to see the markets go sideways or go down. The key in all things is to time your trades and investments. Just a quick announcement, the Tier 1, Tier 2 and Tier 3 charts, all of these charts are now marked up and inside the service. When you seek to time the markets, it's very important to know the structural levels of the major indices, what the fear gauge in the market is doing. The DXY, which represents a flight to safety. Bitcoin represents a flight to risk. Gold is geopolitical. Oil is inflationary. Junk bonds in the US 10-year, the US 2-year give us an indication of forward interest rates, and that's really important. A couple of days ago, I mentioned that the DXY was starting to flatten out and we expected upward price momentum. And also the US 2-year was looking a little bit like it was lower, starting to go higher. That's placed a lot of negative momentum inside the markets. When the DXY and yields come up, they throw a lot of negative momentum and stress onto high growth names, and the high growth names, the Magnificent Seven, are absolutely leading the pack. And therefore, if they get hit, the whole thing comes down. If risk comes out of the market, of course it's going to impact Bitcoin, and if Bitcoin comes down, no alt can escape Bitcoin's gravity. Even just understanding Bitcoin's gravitational pull, a lot of people will say, Ken, that doesn't kind of make sense, because Bitcoin is red and something like TON and BNB, they're green. Oh, I see Solana is red, but why are these green and Bitcoin is red? To understand this question, we need to look into relativity and gravity. Let's do that. Gravity is all about the directional correlation of Bitcoin to the alts. You can see this blue line. That's Bitcoin's gravity. How is it playing out on Ethereum? Ethereum is weaker than Bitcoin's gravity at the moment, but they're moving in the same direction. That's your key. What about BNB, Binance Coin? You can see the gravitational pull. What about Solana? Solana did really well, but it's always influenced by what happens to Bitcoin. What about XRP? When Bitcoin is coming down, the whole crypto market will come down. And you can see that XRP caught up with Bitcoin. And then what did it do? It followed. You can see it all the time. The memes are following Bitcoin. Doge and SHIB, Pepe, and all the others follow Bitcoin's gravitational pull. Gravity is incredibly important to understand. Relativity is the absolute percent difference. When we look at Bitcoin coming down in the past couple of days, we can see that BNB is starting to diverge from Bitcoin's gravity. Now, what is causing this? This is very important to observe. When you see Bitcoin coming down and BNB starting to go up, that represents positive momentum inside the crypto industry. And what about Solana? Don't forget, we're looking at absolute percentages. That's kind of interesting. An absolute percentage. We can see Ethereum is down 2%. Bitcoin is down more. Solana is down 3%. Sorry, Bitcoin is down 3%. Oh, I'm having a fun day today. And Solana is down about 6.5%. XRP is down 2%. Bitcoin down 3%. Bitcoin down 3%. Doge down about 6%. And we can see ADA is starting to separate from Bitcoin's gravitational pull. It's still moving in the same directional correlation, and this throws a lot of people. Going back to the gravitational charts, we can see as Bitcoin was coming down on ADA, ADA was also coming down. When things overextend to the negative side, they typically rebound very strongly when Bitcoin rebounds, and that's what we saw. And then as Bitcoin was coming down, what was ADA doing? It was coming down as well. Now Bitcoin is improving. What's ADA doing? Cardano, it's improving as well. No alt can escape Bitcoin's gravity. But the alts do give us an indication if Bitcoin is going to strengthen or going to weaken. And remember, as price comes down, this is where you want to buy. But the knowledgeable thing to do, especially from an emotional perspective, is just to run away. After all, it's going red and it's obviously going to zero. That's how brains are hardwired. The brain just says, oh, fear, 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 I'm losing money. I just want to bank that loss, so I'll sell. And what you will find is that is a very difficult emotion to overcome. It can take a substantial amount of time, but it really understanding is the key driver of getting in at these particular levels. You'll never pin the exact bottom, so you want to get in at reasonable levels, and those reasonable levels are always structural levels. Total crypto market cap can give us a really good insight into where the entire crypto market is going, because it is the entire crypto market. And what have we seen here? Total broke down and it's starting to come back, but we really need to see what the structure is, because Total covers in excess of 3,700 days. So let's just pop on the indicator. Now we can see a completely different picture. This area around the 2.225 trillion down to around the 2.2 trillion dollar mark was really strong, and it was having a bit of a hard time getting through there. But something happened inside the crypto market that made crypto lose this specific support. Now, what the event was is largely unimportant, but it's typically related to the DXY, dollar, forex strength, and yield strength. We can see all that is happening now is that price is just getting pulled back to this gravitational area. To confirm bullish sentiment, we need to trade above 2.29 trillion. If we do that, first port of call is around the 2.248 and then up to the 2.26 trillion dollar mark. If the bears regain control, they have to get through this 2.209 level. And how you read total crypto market cap against your beloved alt, you look for this specific fingerprint that's playing out and see how your alt varies. And then look for comparison points inside market structure, and then just weigh your chart against total. But it's not just against total that you need to weigh it. You need to weigh it also against Bitcoin. We're seeing a similar pattern play out on Bitcoin. What we need to see here is, where is the structural support level for Bitcoin? Is it down here? Did it bounce from structure? Is it under resistance or at support? And when we do this, we recognize that Bitcoin has been around since 2009. That's over 5,200 days ago. If we just analyze this recent price, we're just getting a fraction of the analysis. We must look further if we want to be institutional grade, investors or traders. And the word is probably "and traders." So let's pop on the indicator and see what's cooking underneath the hood of Bitcoin structure. We can see around this 62,200 mark, we have a lot of structure in there. Bitcoin has to challenge this and get above it and then sweep these previous highs in order to move to the 63,200. If it does that, we're starting to look really positive from a bullish perspective and momentum. But if we get the bears taking control, and remember, the total crypto market cap is now getting up and testing that overhead structure. That's going to create problems inside the alts. So if the alts don't explode upwards, they're going to explode downwards. So we need to keep our eye on structural support levels and where price could go next. From a structural perspective, we always have a three-dimensional strategy. We know price is moving in a wave. It's coming down and then going up, coming down, going up. A lot of people think that if there's a down wave, it's going to just go to zero. It's going to fall through the floor. No, it's going to go to a structural level. If it can't maintain that structural level, it's going to the one or ones below. You can see this is quite a good, strong structural level. These layered structural levels are lighter, but when they hang together, they form a pretty good mass. One thing that you want to keep your eye on is this $60,000 structural level in Bitcoin. Understanding the price is always moving in a wave is a very important thing to do, as is planning out your positive price momentum projections, your neutral projections, and your negative projections. This is from Level 2 Standard Certification. What we can see if we go back to March, we saw that with Litecoin exploded upwards, but then actually closed out at the normalized positive price path. You can expect these kind of deviations because price is exponential inside the crypto market. It's unlike any market on the planet, and it's very difficult to forecast, but we tend to do a reasonably good job of it. We can see that Litecoin closed out on our positive path 2 months ago. On the negative path, we also had a near closeout there just 1 day before. And when we look at this month, if you want to see the price projections or the price paths, they're inside the service. And I'll cover them off in the daily videos from time to time on a lot of different projects. We go across stocks, commodities, crypto, forex, and just about everything. But the key here to understand, when you look at a particular price path, you must have an upward direction. You must have some idea as to where it could go, a neutral and a down direction. What you're trying to do is just capture the price within reasonable boundaries. Sometimes price will act very unreasonably. It will sell off like this, but it tends to come back to these normalized price paths. And for example, you would think in Litecoin, around say the 13th, you would think this price path is so far away from reality, this thing is going to zero. It's just going to go down and down and down until it hits nothing at all. That's not the case. Everything is structurally bound. And because we can get rampant fear inside the crypto market, it's just a really small market. What we expect and what we do with these paths is we seek to time and to determine through projection of structural levels. These are all structurally bound, these particular paths. We seek to figure out where it could end at the end of the month with our three-dimensional thinking. Your risk management is really important. Doing your three-dimensional risk management is really important. If we look at USOil, which has been trading for about 60,000 days, just because something attains the positive price path doesn't mean it's going to end positive. Because when you look at oil, you've got to look at so many other charts. If you're just stuck in the oil chart, trading oil, you're doing the wrong thing, because oil is influenced by the Tier 1, Tier 2, and Tier 3 charts. We can see even though the month previous with USOil was positive, it started to lose its structure. It went down to a consolidation level and then just surprised the market, but not us, because we anticipate the price will move between these specific boundaries under normal conditions. What about what happened in the month before that? And the thing to notice, these particular price paths are drawn when the video is, well, before the video is released inside the service, and then these price paths are never changed. You can see USOil closed out on the positive price path, but it was kind of going negative at the start, then went positive, got over structural levels, and then went for it. You must be fluid and you must be flexible. Don't just anticipate that something is going positive and therefore will close out positive, or something is going negative and therefore will close out negative. Price can jump between these three different price paths, and that's exactly why we do them. What about if we were looking at dollar yen, and dollar yen has been around for quite a few days, looking at the positive price path and the neutral and the negative price path? What that does is gives you a bit of a boundary as to where prices can go in any particular month from a reasonable perspective. Last month was an incredibly volatile time for dollar yen, and we saw it spiking up. But where did it close out the month? Pretty much where we thought it was going to close out, under normalized price conditions. You can see that you can get these big deviations or deviations away from price paths, but then they typically come back to it. As we've seen, things spike under and then come back, and that's why we draw them. Now, what's happening right now, you'll notice that dollar yen was decaying. That boosted risk-on sentiment inside the markets, but now it's starting to rally, and that's pushing the markets in the opposite direction. You can see if you're just looking at one chart, say Solana, and you're not looking at dollar yen, you're not looking at the DXY, the US2, the US10, gold, silver, you might say, Ken, why the hell would I look at those things? I'm only trading Solana. The truth is, no, you're not. You're trading all of the charts. You just have your focus on one chart. For example, if you were looking at Solana's price levels or you were looking at Bitcoin's price levels, they're influenced by all of the Tier 1, and the Tier 2 and Tier 3 give an indication as what the Tier 1 could be doing. It's a fascinating thing, but nobody is taught to look at the market in this way. And because they're not taught, they don't do it. And they therefore lose a heck of a lot of money, because unfortunately, I was never told and never taught, even though I did a finance degree, to look so broadly across the market. I guess my professors didn't know, or they wouldn't tell us. I don't know. I've got no idea. But having been inside financial markets for nearly 40 years, I can't stress enough how important it is to look across the Tier 1 or the engine of financial markets globally, Tier 2 and Tier 3 for confirmation signals. Even if you're only trading in one chart, you must do this, because then you'll have timing. And if you've ever bought at the top and sold at the bottom, you realize timing is really important. A lot of people get angry at the market because they don't have three simultaneous strategies. They don't have a down strategy, a neutral strategy, and an up strategy when they place their trades, either to buy or to sell. It's just always good to remember the price is always moving in a wave. This wave-like action of price really throws a tremendous number of people, because even in an uptrend, as prices are coming up, yes, price can come up and then retrace and then come up and then retrace and then come up. It actually does this. This is what price does. And if it's in a downtrend, it does exactly the same. It comes down, it then goes up. It comes down, it then goes up. It comes down. You get the idea. A lot of people say, I'm just going to know that it's going up. I'm sure of it. Nobody's sure of it. If you're in an uptrend, there are a lot of little up and down waves in there that you need to be aware of. That's exactly why we must have three simultaneous strategies. You'll find your financial fortunes will change as soon as you embrace this thinking. Also, do your best to create your own rules or find rules from other people. And Rule 446 is really important. All markets, and therefore all charts, are intercorrelated and interdependent. To look at one chart, you must look across all of them. And the more you look at, the more you're going to see, and the more timing you'll have. Just as price moves up and down between resistance and support levels, so too does life. I know that there's a large number of people inside our community that are going through life pullbacks at the moment. Please know our love and healing thoughts are with you. No matter what it is, if you're going through grief, please understand grief can be deadly. Grief is something that, if left unmanaged, can cause tremendous internal harm for yourself. If you're going through a grieving process, please know that we love you and things are going to get better. Just always remember also that grief, out of control grief, can cause you serious stress, and that stress can dampen your immune system. It can create all sorts of problems. So it's important to grieve intelligently. I know that sounds a little bit harsh, but it is important, and I would say it because I've been through it. Great love creates great grief. But when you understand and when you go through life, you understand that grief is a very dangerous commodity. You have to manage your grieving. And nobody, just like how the markets work, nobody tells us these things. I have no idea why not. The key, therefore, is to gain as much strength as you can, to focus on the positive and to focus on what you still have. And a beautiful thing that we can all do is to extract gratitude from each and every day. By doing this, we honor the day. It's not at all selfish to seek to find gratitude in each and every day. In fact, it's what gives you happiness, and the people that love us want us to be happy. As we're a financial community, of course we focus on money, but money is just one component of success. There's so many more components. Money flows via the right thinking and the right action. So many people inside the crypto market have tried wrong thinking, taking from others, and wrong action, and they've ended up in jail with a criminal record. So what is right thinking? Right thinking always starts with kindness. When you're kind to yourself, you can be kind to other people. Frequently, people are not taught to be kind to themselves. Again, this world does not equip us with the skills that we need to survive and live a happy life. Inner peace and outer peace are incredibly important, as is gratitude and happiness. And you can see, when it comes to positive excellence, we put money and success where it belongs, in last place. Because success is an outcome of doing the right things each and every day. When we do the wrong things, eventually that catches up to everyone. Some call it karma, it's just cause and effect. Therefore, our key is learning humility and patience. Life just redirects us on our journey. In truth, the best way to have a beautiful life is to just have better habits, because they create a better life. Now, what is a better habit? A better habit is anything that's focused on positive excellence. And why is that? Because better habits, doing better, being the best you that you can be, create a better mind. And a better mind creates better outcomes. And we must always remember that all results come from the mind. If we think that the universe is incredibly unfriendly and wants us to fail, we'll set ourselves up for failure. So therefore, know that the universe wants you to succeed. So every day you can show kindness, integrity, and gratitude because you're here and people love you. Just know that opportunities in life reset daily. You're always being directed to your single best use of your skills. Know that you are worthy, and going slow is going fast in the long run. There are no shortcuts in life. Starting small and scaling is the key in financial markets, and buying on red and selling on green is the key to profitability. Also understanding that life pullbacks are simply giving you the strength for the next life rally. We don't learn from success. We learn from hardship. Hardship makes us stronger, makes us wiser, and we need to be persistent, dedicated, and committed with the concept that we win or learn and never blame. Frequently, people use their force of will to say the world must do what I tell it. The world will never do what you tell it. The world will do what is best for you. And that is often the last thing that you would expect, but it happens all the time. So always solve your problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.